What's good, money gang? It's your boy TBT, the Brainless Trader. We back with another video. Right now, what we about to do is give y'all a little bit of a trade review. All the trades that we took last week. Basically, we'll do these two because these were the two trades that I took in the beginning of the week. And then I already did the stream trade review, so y'all can go and watch the video where I talk about my first stream. And I kind of do a little bit of trade review on that one. I might separate that video out just to be a separate one so it won't be too long. But anyways, what we got here is essentially we had a day where price had gone past liquidity. It actually sought out the liquidity somewhere over here. Yeah, this one right here. And on Monday, essentially it traded past, and then the next day, well, that's the 11th. What day is that? I don't even know. I think this was a Monday that it was doing this. And then, actually no, it might have been a Monday it was doing this here. I don't know. Either way, I think I took this trade. What day did I take this trade? I think I took this trade on Tuesday. So yeah, Monday had to be this, and then 12th must have been Tuesday. I hope. If I'm wrong, whatever. But essentially what we're looking at is price had already sought out liquidity, right? I showed you that over there. And so now you're starting to see price do a little bit of reversal, right? So you're looking at price using its order blocks now to turn back the other way. As you see here, if we zoom in, you already kind of see that price used this fair value gap to try to jump off of, and actually went on and sought out this buy side liquidity right here first. Then it drops back in to this very small fair value gap, but it's legitimate, right? Because it already tested it out here in the order block. Now it's testing out the fair value gap as well. Comes down into here and moves up. Now, one thing that we're taught is essentially from ICT is that once price enters this area twice, that's about the limit. You don't want to be trading, for example, if price came back down here to try to touch the fair value gap again. I'm a little bit more sketchy about that move, only because price has already touched it twice. So 3 times kind of is the charm with this one, with fair value gaps in pretty much any PV array. Fair value gaps, breakers, order blocks. If it's going back and touching that thing twice, I mean not twice but 3 times, that third time you looking a little bit suspect. You feel me? Not to say that it can't go back up the third time, but anyways. So this was the second time touch for the fair value gap, second approach towards the order block, but didn't touch it quite nearly. And then essentially you see my entry right here. Got into a buy where I wanted buy side liquidity here. You see these beautiful relative equal lows right here, or sorry, relative equal highs, buy side liquidity. And if you actually go to my Twitter, you will be able to see, check your boy out, Brainless Trading Money Gang. You dig what I'm saying? Big dog over here. But if we go to my Twitter, I actually posted this earlier in the week. Where I was kind of looking at this trade. So I'm reposting people here, reposting people, talking to people. Where is that trade? Here it is. So I posted, and I posted this on TradingView too, but I had to take a screenshot of the actual trade where you can see I talked about essentially what I did in that trade. And so if you want to follow me on Twitter, Twitter is probably the fastest way to get stuff that I'm posting about trades. So I'm kind of actively posting as I'm trading, and then I take that stuff and I transfer it to Instagram like over the weekend or whatever. So Instagram kind of gets stuff later. Twitter is like the fast feed stuff, and eventually I will open some sort of maybe a Telegram or something that so people can like kind of follow me a little bit closer, so that they can have the opportunity to see what trades I'm getting in kind of more at a faster pace. But you can see on the 5-minute that I was entering there, so we're gonna go back and kind of check it out, but just wanted to show y'all Twitter. But yeah, so essentially this is the 15. If we break it down to the 5, we can kind of see a little bit more clearly where I got in and why. So that fair value gap on the 5 is a little bit bigger, which I like. Obviously you see buy side liquidity here, a little bit of buy side liquidity here. It's just relative equal highs, relative equal highs. These are relatively equal highs, relatively equal. You can see by the crosshairs, relatively equal highs. That is where liquidity lies. You dig? So I took the trade around there thinking that I was gonna eye buy side liquidity ultimately up here, and that would have given me 60-ish pips. which I was really excited about to see. Only problem is once we got up here and we started getting this negative kind of movement, I pretty much got out. Like right here as we got close, because we got this little movement here. Now I'm a little bit more of I'm definitely a scalper. Like I'm a scalper. Okay, so when I start seeing price kind of like, especially this is a counter trend move, right? So let's just look at the fact that overall this whole year so far, 2022, we've pretty much been bearish the majority of the year in foreign currency, especially GBP, USD. So understanding that, I'm really not trying to hold a trade that's counter to the trend, if you feel what I'm saying. Now, with that said, I was already stopped the profit. I'd taken a small 5 lot. I could have left it in, right, to just see what it's gonna do. But the previous week, I told y'all if y'all watched the video where I do my trade reviews, I essentially had 3 different trades that I was up $3,000 to $4,000. And what did I do? I was with the higher time frame bias, and so I left the trades in thinking that eventually they're going to go a little bit longer after a little bit of a pullback. And guess what happened? The bull crap went straight back to my darn entry. I didn't lose money, but I didn't gain money, and it hurts to not gain money. You feel me? When you're already ahead $4,000 on 3 separate trades, like, it hurts bad. So I'm up 800. I'm like, I'm taking this money. But anyways, price kind of gives you that institutional order flow entry drill that ICT likes to talk about, and maybe I'll make a video about some examples of that. But essentially, it hasn't breached fully the major liquidity, and so it's just essentially it's a way to say price is gonna pull back into a fair value gap, which it did, boom, and then it's gonna continue. So at the time I had a meeting at work, so I got out, and then right after I had a meeting, and so I wasn't able to see this. Had I seen this price kind of go up in this specific candle here, I might have taken the extra one. As you see, I kind of took an extra trade in my demo here, but I didn't take this trade in my actual trading account because this is kind of too far from where I would have wanted to enter, somewhere around here. So that if I had entered there, it would have given me like 20-ish pips more, 30 pips, which I would have been very satisfied with as well. So and stop would have been below here. But anyways, I took this move about 20-ish pips. I think I entered it about mid this candle. Yeah, about 20-ish pips. Got out on this candle that was getting ready to face down, and I was completely fine with that. Just a little bit of peace of mind. Start your week on a positive note. Now, this trade here was a mistake. I was looking bearish. Now, price had already breached liquidity, so I'm looking bearish now, thinking that price is getting ready to come back down, not knowing that price is getting ready to keep going up. So I took this trade really hoping for a price to come down, which is where you have me in right here, but then essentially I just didn't get any more lower lows, and so I had to go ahead and get up out of there. And then I tried, so this is where I took some drawdown earlier in the week, where I tried to essentially get into the move on the buy side, and I just wasn't sure. I was like, you know what, I'm taking these trades. This isn't really, I mean, it's a fair value gap, but like, it's not really like what I want. You know what I'm saying? I was really wanting downside movement. So I just decided up here, I took a trade here, got in, got out, got in, got out. I was like, you know what, I'm done for the day. I'm gonna just relax, hang out with my son, all that stuff. And then what happened was, as you see, they manipulated the heck out of the charts. They took this thing in one 5-minute candle. They took this thing 84, 85 pips. That is insane. Not to mention that they went all the way back up and took all those 80 to 100 pips and purged buy side liquidity again, and then gave you a beautiful little setup here where you got a breaker, I mean not a breaker, but you got a order block, up close candle, pulls into the area where the order block is. You got a fair value gap below, it fills in the fair value gap, then does the same thing, fair value gap here, fills in the fair value gap, doesn't touch the order block, and then trickles on down the rest of the day. I don't really trade after 12, so that was out of it. I wasn't gonna take this one anyways, but I'm glad that I just stopped because I was wrong here. I thought I was essentially what I saw here was that now, and this is an issue because this is a bad trade to take. So I saw this, true liquidity run, price kind of filling in this fair value gap, but this goes past this fair value gap. It still comes bearish, but this would have been the time for me to enter, if anything, right? And not here, where I was thinking, I seen this candle, I was like, okay, we broke this area. I was thinking that we're getting ready to see downside movement towards this liquidity, this sell side liquidity, and ultimately this is what I was hoping for at that time. But price failed. It didn't give me another lower low, so that's why I went ahead and got out. Pretty sure my stops were set somewhere around here above this high. And once it didn't eclipse the high, I was thinking, okay, I'm good. This is a lower high from here. All we need is price to break this zone and I can stay in. And it didn't, so I just decided to get out of this original one. And I think that once I get that first L, I need to just sit back and wait, because what happened that day is that this is before I think they had like some small 8:30 news, which is why I was trading it, because I was thinking there's only London news. I'm gonna trade it after the London news, but I need to be in here more so around the 3 a.m. to 4 a.m. time frame to find like just a little bit better of a move. Would have been something like 20-ish, 30 pips, and then once price is coming back here, I would have just been able to get out still in 20. So, but I think that's the thing, is that with the new strategy that I'm going with, that I explained in my stream video, where I talk about breaking the trades down, having a much smaller lot size to begin with, and then if you want to get to 15 or 10 lots, you do a 5, you let that go, stops the profit, and that essentially allows price to prove you right, and then you go into another 5, find a nice entry, let that go, stops the profit, and then if you want to scale again, you can do that. Because what it does is it allows you to move the risk from one trade to the next without increasing that risk, right? Without putting all of it on one trade, right? So that is what I'm going to be doing moving forward, and y'all will see it on the streams. And I'm going to actually have, similar to how I have, like I showed y'all this page where this is like my actual model, what I follow. I'm going to have another page just like this where I go through the fundamentals and essentially kind of just lay that out for y'all. So yeah, with that said, that's my little trade review for y'all. Hopefully this was helpful, kind of give you some ideas as to why not to get into certain trades. Like for example, there's really no fair value gap right here. Fair value gap is back here, and so I think even though I know this broke and I was thinking it was coming down here, I would rather have had this order block and had a legitimate fair value gap, not this small, like much more sizable, to be able to get in and feel a lot better, set the stop above the fair value gap and let it ride, you know what I'm saying? So in comparison, if we look at the trade review from what I showed y'all in the stream video, you can see obviously a much larger fair value gap with a much larger candle. The order block is small, but it doesn't really matter because you got the order block with the range is similar to the same size as what the 15-minute was for the for what is the breaker over here too. Where is that? Oh, it's over here. So what was the breaker was this large down close candle, high, low, higher, high. So you had those three confluences together, and that really what made that trade strong, even though I did the same thing, entered into too much drawdown before finally getting it right. So hopefully I can avoid this and just get it right and send myself to 15, 20, 30, 50K a month eventually. But that's gonna take time, so we're here for the long haul, y'all. With that said, I'm finished with this video. Hopefully y'all enjoyed it. It was helpful, and we'll see y'all in the next one.